we have a series of reports. This isn't really just one story. We have the World Bank, the United Nations, and now the IMF most recently saying that we should expect a global recession in the coming months if it hasn't already basically begun. And we also have Jamie Dimon saying the same thing just a couple days ago. And, you can expect to start seeing these things come up as CEOs, especially of major banks and other financial institutions, make these statements as a way to get a headline, the way we're giving Jamie one right now, because it has really become a pretty easy prediction to make. And it's really about some very comprehensible things having to do with Russia and energy and interest rates. That's maybe a little bit more complicated. But we, and I think that crypto definitely needs to be paying attention to this because we're trying to think about the market cycle. And we already have some headwinds with just domestic United States interest rates. And we're going to have, I think, bigger problems on a macro level going forward. There might be some upside down the road. A recession does have some good features, but it's a lot to worry about. And I see Will nodding his head in agreement. So, Will, how do you think this is going to play out in general or in crypto?
It's my favorite part of any crypto show. We all got to put our tinfoil hats on and predict the future of macroeconomics, even though we just like the coins. This one is interesting because we do have Jamie Dimon walking out front talking about what the economic conditions of the future are going to be like. And there's a lot of other people who are saying very similar things. So last week, the UN also came out and said that they were pretty unhappy with what Jerome Powell and the Federal Reserve are doing by increasing interest rates. And for good reason, right? We saw that mortgages are now going up about 7%. It's the highest mortgage rate in the last 20 years. That's not great for economic development because people are not going to buy a house. I'm not going to buy a house right now. I'm probably going to wait. You're going to see a lot of asset prices go down because there's an inverse correlation between interest rates and asset prices, and that's going to slow businesses down as well. You can't sell your good for as much money as you used to in the past. So I think there are some things that sort of line up. That being said, to your point, David, everyone loves to be a Doomberg. Everyone loves to be zero hedge. Everyone loves to throw out this headline. It's how you get clicks. So who knows what really happens, continue. Right? Yeah. Zach, I'll throw it up to you.
I want to give it the fact check. David's got a fact check ready to drop. Come on, man. Take it.
Everybody loves to be zero hedge. I mean, maybe. Sometimes. Sorry.
That's it. That's all I got. Jen, take it away.
I was just going to say, the article says corporate America and Wall Street are already bracing for the downturn. And economists have been saying we're due for a recession since before COVID happened. Then we had all of these black swan events. There's a war in Ukraine. COVID happened. And so I think that corporate America should have been bracing for longer than maybe some of us would have expected. I wonder if they actually have. We've seen what's happened to the crypto industry as we've kind of turned into the bear market. And I hope that corporate America has been preparing for this and that people aren't going to be the ones suffering at the end of the day. David, you said that there is some good that can come out of this recession. And so I want to throw it back to you so you can end us off on a good note. What is the good that can come out of this?
Well, I'll actually give you a two-part answer there because some of the good is it's good for the United States because a lot of this is spillover effects from the changes to interest rates, which, as Will pointed out, are not great for the real estate market domestically, but are, according to all conventional wisdom, necessary to get inflation under control. And in the long term, that's really fundamentally necessary for a functioning economy. Unfortunately, as we're seeing everywhere from Europe to the UK to the developing world, that has really harsh impacts for countries outside of the United States who basically wind up with terrible exchange rates, and that impacts their ability to export primarily, import. And so they're dealing with inflation based on imports. Food is getting more expensive for people in the developing world. That's really bad. That's probably in a human dimension, the worst aspect of this is going to be what happens in the developing world for people who are going to face, for the first time in more than a decade, some probably serious challenges with literally just eating. So all of that is bad, and it is a cost paid by the rest of the world to the United States, primarily because of dependence on the dollar as a system of exchange. So we can put all of that under the why we maybe should move away from the dollar umbrella. But to speak to the real upside is that, as you know, Jen, you mentioned, there have been projections that we needed a recession, or we're due for a recession for a long time. I mean, 2008, we've had a little bit of pullbacks here and there, but in terms of a real recession that lasted on the order of a year or more, we haven't had one for more than a decade. There's debate, I'm sure, on that, but essentially a real recession has been a long time coming. And that means we get a lot of dead weight in the economy. That means we have a lot of zombie companies who are not making any profits. It means that we do not have a sustainable foundation for growth going forward. A recession clears out some of that. You get rid of, maybe some unsustainable business models that have been relying on loans. And so that's the upside, is that we have a year, perhaps two, of belt tightening. We have some really serious impacts for the developing world, but then we come out of that with a lot of dead weight that is cleared out. Will, you want to get in?
Yeah, I just want to bring it back to Bitcoin and crypto and get your guys' opinions on this. I think the difference here for crypto is previously Bitcoin just been in a bull market. It's always grown in a bull market. It's been very cyclical, but the wider economy has always been permeable, and that's been great for technologists, been great for entrepreneurs, being able to build pretty easily with lots of credit floating around. But if the market changes and we have a recession, what happens to our 4-year cycle theory, right? We had 2012, and we had 2016, 2017, and then we had 2021, 2022. Are we seeing like another 4-year cycle, or is it just down only for quite a while until the market figures itself out again? I think on Bitcoin Twitter, we get a lot of opinions. Some people right now are just saying that Bitcoin's going to become like the new US Treasury bond, stuff like that. Like, we just see such random, atrocious financial advice. But it does bear some questioning, right? What's going to happen with Bitcoin going into an actual recession? David, I'll throw it up to you for your opinion.
Yeah, sorry I'm monopolizing this segment, but it is why I wore the tie. And I think that what we get is the 4-year cycle stays the same, and it's a monster next time around, because we're going to have a lot of downward pressure. And when we're talking about fundamentally strong assets, including Bitcoin and probably Ethereum, we're going to have a lot of downward pressure. But the secular forces, the broader forces that make Bitcoin and Ethereum sensible for not just right now, but 10, 20 years down the road, those aren't going anywhere. And everybody forgets recessions are shorter than you can imagine. Recessions last a year, 2, 3, and then you're out. And so things, you get a recession, clear the brush, keep the fire burning, and then you go forward. I don't think the cycle gets interrupted. And also worth mentioning, we have a ton of venture capital floating around in the system right now, and there have been signs that it's going to continue. So I think that we benefit a lot from that in terms of floating through this. I hate to say it, but you're not wrong.
That was such a bullish take. That was wow,
it really
that
was.
Giga bull.
I brought the bullish
Ready
energy.
to go.
Amazing.
Go.
Again, the tie.
LFG. The tie, people. It's the tie.